of IPO by a company is governed by Issue of Capital and Disclosure Regulations 2016, provision of Companies Act 2013, and RBI guidelines from time to time. The reason a company goes for IPO is for funding requirements like joint venture or capital expansion or clearing of debts. Non-funding requirements include for giving stock options to the employees, increasing the liquidity in the market, and at the same time, improving the corporate structure of the company. The conditions which a company has to meet for raising an IPO are the company should have minimum 25% public holding post issue of the IPO. For new listing, the 25% holding will matter if the company's capital post issue based on the offer price is less than 4,000 crore. For listed company, they should bring the shareholding to 25% in 1 year if they are not having public shareholding of 25%. Now, a company should have a track record of last 3 years with respect to profitability, and they should have a net worth of greater than 1 crore and net assets of greater than 3 crore in the past 3 years. The proposed IPO size should be less than 5 times the net worth of the company. In case the company is not meeting these requirements, then uh, 25% public offer, which is given by the company, 50% of it should be given to the qualified institutional buyers, and minimum post issue face value should be greater than 10 crore. The promoter contribution in the IPO should be 20% in an unlisted company. The lock in period is for 3 years. However, if the company in the past 3 years have paid dividends and remained profitable, this promoter holding will not be required. The corporate government governance requirements include the board having 50% non-executive director. If the chairman has executive powers, then 50% independent director should be present in the board. They should have an audit committee with minimum 3 directors headed by an independent director, and corporate government activities should be reflected in the annual reports. The company, in its red herring prospectus, has to give details of the capital structure of the company, the purpose of the IPO, company management details, the business the company is doing, and what are the future prospects of the company, and litigations of the company, if any. All this information will comprise a comprehensive initial public offer.